Stage has been set and moving ahead. We have again, I'd like to call our dignitaries and speakers here on the stage for the customer onboarding and digital KYC, transforming the credit and experience. Ladies and gentlemen, please put your hands together to welcome our distinguished speakers on the stage. I would like to call upon Mr. AMLAN Singh, Head Operations Customer Care, IIFL Finance. Ladies and gentlemen. All right, I would like to call upon Mr. Yogesh Rawat ji, COO, Avanse Financial Services. Ladies and gentlemen, can we hear it for Mr. Yogesh Rawat? Now, I would like to call upon Mr. Dillip Kumar, Head AIML, L&T Finance. Can we hear it louder for Mr. Dillip Kumar? Now, I would like to call on stage Mr. Vikas Dhankhar, CTO, NeoGrowth Credit. Hello, sir. I would also like to call on stage Mr. Anish Chaudhary, CBO and founding leadership member of IBDIC. Now I would like to call on stage Mr. Shoubhik Ghosh, SVP Corporate Strategy and Planning, SMFG India Credit. Now, I would like to call on stage Mr. Shuvam Misra, Chairman and Founder of Remiges Technologies, and he is the moderator. Ladies and gentlemen, एक बार जोरदार तालियां श्री शिवम मिश्रा जी के लिए भी हो जाए. I would also like to call on stage Mr. Ajay Kumar Mohanty, PNB Housing Finance Limited. He has been the Head Internal Audit and Chief of Internal Vigilance. दोस्तों एक बार फिर से हमारे आज के सभी स्पीकर्स और यहाँ पर हमारे मॉडरेटर सर और हमारे डेलीगेट्स के लिए जोरदार तालियां हो जाए. Over to you, sir.
Hello, everybody. I hope you can hear me. Yeah. Okay, so here we are, and we have a really awesome panel because I was going through the the brief bio sketches of each of our members, and I'm really proud that I have been given this scary responsibility of steering this panel discussion. With people like you on the panel, there is no need for any steering, but still. So I'll just introduce each of the panel members briefly so that we know what quality we are faced with today. In random order, Vikas Dhankhar. Vikas, hi. He is currently CTO at NeoGrowth. Okay, NeoGrowth delivers customized financing solutions for the MSME segment, and he has over 2 decades of experience in technology leadership. Okay, so that's Vikas. Thank you. Yogesh, you are Yogesh. Yes, Yogesh. He is COO. Yogesh is COO at Avanse Financial Services. Yogesh, is that the right pronunciation? Avanse is okay? Avanse, thank you. Avanse Financial Services. He has a master's in business management from IIT Bombay and Washington University, St. Louis, right, Yogesh? Yes. And he is a qualified CA and a cost accountant and has more than 2 decades of experience in BFSI. Anish.
Mishra sir, I'm sorry interrupting you in between.
Yes, please.
Mr. AMLAN Singh, Head of Operations of Customer Care, sir has just come in.
Yes, please.
We
will
ladies
welcome
and gentlemen,
him.
please put your hands together to welcome Mr. AMLAN Singh ji, Head of Operations Customer Care, IIFL Finance.
No problem, Amlan. We are all in the same boat. Anish, right? We were talking about Anish, and Chief Business Officer at Indian Bank's Digital Infrastructure Company, which is an entity owned by 18 banks. So you're like one of the foundation organizations under the banks and providing infrastructure for them. Fantastic. Anish is a banker and a business leader specializing in building businesses and driving digital transformation. Shobhik is part of the strategy group at SMFG India Credit, and he is directly reporting and working with the Chief Strategy Officer in the strategy team. And his prior engagements included TCS, Arohan Financial Services, Wipro, and other leading enterprises. He has a storied career, and he has an MBA from XLRI Jamshedpur and a bachelor's degree in engineering, right, from Jadavpur University. And he is a CFA and a financial risk manager. Ajay, yes, you are Ajay, right? Sorry. Ajay is Mr. Ajay Mohanty. Ajay is the head of internal audit and chief of internal vigilance at PNB Housing Finance. Okay. He is a chartered accountant, a certified information systems auditor, and a certified fraud examiner. He has more than 30 years of experience with banks and housing finance companies. Right? Mr. AMLAN Singh, yes, he is head of operations and services at IIFL Finance. And he has 20+ years of experience in various functions, including operations, services, cross-border payments, international settlements, and so on, right? A very rich experience. And in IIFL, which is a very well-known Tier 1 organization in diversified finance, Mr. Dillip Kumar. Yes. He's a head of AI, ML, and data analysis in the L&T Finance organization. He has a BTech from NIT Rourkela and an MBA from IIM Calcutta. He was telling me he has worked for several years in the United States also. He has 28 years of experience in banking, in data, in AI, ML, agentic AI, and so on. And he is a published author of multiple books and has patents to his name. So this is the kind of track record which really makes people like me fall very silent. Okay, so we have a very rich panel here, and we are hoping to have a very interesting conversation, and let's see where it all leads. Okay, before we start, I think I'm supposed to give you a couple of lines of introduction about myself. I have been, and I was just recently calculating, I have been an engineer either as a student or as a professional for about 41 years now, 42 years now. So I have been a part of India's very famous at that time, India's first well-known internet portal, India World, in the 90s. With my friend, the founder, Rajesh Jain. At that time, there were only 2 games on the internet portal scene in India. Rediff by Ajit Balkrishnan and India World by us. That was a very, very long time ago. I had a software company which I founded, which does software projects for various enterprise organizations in India and abroad. And most of our clients seem to be from the banking, finance, and securities and capital market space. So that's about it. I think we will just move ahead with the panel now and do interesting things with our questions and our discussions. So basically, we are now reaching the core of today's topic, okay, KYC. I will let the panel do most of the talking, but I wanted to share one little incident which introduced me to the world of KYC. My company does various projects. We are rewriting a couple of KRA systems for, I think, 2 of the 5 or 6 KRAs in the country. So we have some experience in that area, but that's a separate matter. I was on a trip to Singapore, Indonesia, and we met some very leading business partners or system integrators in Indonesia for some casual conversation. They were all in the financial sector space in the Indonesia market. So the way they were talking to us about our track record was very startling. They said, India is, we look towards India for guidance. We see India as a country we should learn from. I said, what the hell is going on, you know? So, so they said, look at your systems. You have KYC, you have KRA. We are still learning. And that got me thinking, you know. And the conversation continued, and I came back and I did some reading up, and I got this impression that forget the rest of the financial sector, just in the area of KYC, India is probably one of the leading players in the world. Not in Asia, in the world. And I'm fairly convinced that the place where we have taken just this topic of KYC, we have taken it from a business process to a service, to a pillar of financial inclusion and depth of market penetration of financial services in our country. So this is one of the pillars on which the financial growth of this great economy actually stands. And I had to go to Indonesia to understand it. So with that, I think let's look at where we are on the KYC front and what are the thoughts that our panelists have in this area. So to start the story, why do you think this is a crucial thing? You know, let us share some of your thoughts about why the topic of KYC is such a crucial part of NBFCs or the banking sector in general, etc., etc. Would one of you want to take it? Yogesh, would you like to? Yeah.
Yeah. Good evening, and happy to answer that. Probably, I will rather just take it to one step ahead, one step forward, and take it why the digitalization is very crucial for NBFC sector. Right? So basically, we are all part of a NBFC sector. So a quick introduction. While Avanse is a name which largely may not be a very regular name for Indian diaspora. So this means advance. Avanse is a French word of advance. So we are a niche education financing company, and our overall vision is to make education financing a very seamless journey for every aspiring young Indian. So we would have impacted close to 500,000 students so far in last 10 years, 10 years of our presence. So we largely finance the domestic education pursuits for Indian students as well as the overseas education pursuits. So that is what we are. So, and coming to your question, sir, for me, I guess considering the education financing sector is also a very high growth sector. So I would say last around few years, so NBFC sector has been growing at around 20% plus CAGR. So against versus the bank, which is largely at 10 to 12%. But what is the problem here? So the problem statement is the cost to income of NBFC sector is somewhere around 35%. Versus banking sector cost to income at around 15-20%. So the problem statement is an opportunity here. So, and the answer here is, so digitization, if adopted by NBFC, will always help for a last mile credit delivery, and of course at a very cost efficient manner. So in Avanse, we have also adopted the digitization in a very intense and wide way, I would say. Broadly, 5 principles we have followed, and of course, the KYC is an integral part of any digital customer onboarding, and I would also, in fact, take opportunity to thank regulatory bodies here. So they have worked immensely in last around 10 years in making actually this happen. Everything came later on. The first came the overall, the KYC, the CIP, customer identification process, and customer acceptance process, regulatory, digital video KYC, e-KYC, Aadhaar authentications. Today we can do a PAN card verifications, passport verifications are done online, and the entire customer onboarding is done. So 5 principles largely we follow, and I'm sure it would be true for every NBFC, which largely we all are representing here. So first is, of course, the customer experience, enhanced customer experience in a paperless or a semi-paperless journey. That is the biggest thing what you can give back to the customer, to a very speedy decision making. Then, of course, the reduced efforts, reduced cost. That is the crux of the entire digitization. Otherwise, why would anybody in addition to the customer experience, adopt this? So, and of course, the regulatory strengthening is very, very strong in digitization. Paperless, we know that while there was always a benefit of meeting the customer, here the customer is at distant. But thankfully, the model is so integrated through all the API first architecture that we can verify each and every document which largely the customer is giving. So that is where it is. And of course, the data sanity is very, very high. Consent architecture is being sharpened. It is still evolving, I would say, but it is getting strengthened over a period of time. So entire stack of regulatory and the enterprise, the entrepreneurs who probably would be present here and outside and sponsoring this show, together I think they have come to make the digitalization of customer onboarding very, very seamless for any NBFC or a banking sector.
Thank you, Yogesh. This was really useful. Shoubik, would you like to add something?
Thanks. Very good afternoon, everybody. So, digital onboarding, I'll just take one step ahead. While KYC is part of the digital onboarding, today the digital for NBFCs, digital onboarding is just not a competitive edge. It's an imperative. So if I look at a decade ago, a personal loan would have taken 2-3 days to be sanctioned. And today we get a personal loan sanctioned in less than 30 minutes. Out of that, 15 minutes is just spent on document updatation, customer data entry, e-consent, so on and so forth. And rest of the time is spent on the various checks that is there for onboarding, underwriting, and finally sanctioning. For example, checks are internal checks and external checks as well. External, there are bureau checks, there are fraud checks, there are identification checks, which is actually the KYC point that we started off with. And internal, there are policy checks, there are scorecards and all before I actually underwrite a loan. So in this perspective, while I spoke about personal loan, I take Yogesh's point that in education loan also he has given the example that digitalization has taken or greatly accentuated the process. I want to touch upon one more concept that is there as account aggregator. There is a new license category that was given by RBI as AA, account aggregator. So this account aggregator framework has seamlessly connected the financial information providers and information users. And this seamless connectivity, along with 100+ API connectivity of the LOS, makes the digital lending very seamless and with a very faster TAT. Now this particular faster TAT, as Yogesh also pointed out, kickstarts a virtuous cycle. What is a cycle? It starts a cycle of higher productivity. Higher productivity means higher incentive for the front office or the salesperson, higher or lower OPEX for the company, low attrition, and it actually impacts my bottom line. So in today's world, just to conclude that digital onboarding is imperative and there is no other way other than adopting it.
Okay. Yeah. Great. Thank you. Anybody else wants to add anything on this, or shall we? Yes, please, Dillip.
I can add something. Mm-hmm. So what both panels they're talking, right? It is the KYC is absolutely right. But we are coming a lot of the consent issues, right? DPDP Act, the consent systems, right? Again, a lot of I saw ID5, one of the art over here, right? So even today we are doing a lot of API and all those technology we want to use it. Now AI is coming into picture, right? How we ensure the consent management we are taking, the image we are taking, the video we are collecting from the peoples, and doing the lot of data exchange in terms of consent, right? Even we have not taken the consent from the rural people, right? The ML lending kind of the ecosystems which exactly happens in most of the NBFC they are doing, right? So in that case, consent we even take, but we don't do processing right way. So what happens, when we are trying to do any kind of service, that consent is hitting a lot. So I'm not sure the kind of KYC today we are doing, how it will be attached with the consent kind of things, right? And there is a 250 plus regulatory consent is coming into the picture, right? So all these definitely need better solutions. Of course, RBI and other regulatory body, they are working. But I would suggest, even we are doing a lot of AI-related works, how to deal with this consent, still a lot of hallucinations exist, still a lot of deep faking, those are across the globes going on. So we definitely, getting, into the place where, we create very safe planet, relating the consent, relating the KYC, relating any images, right? Yesterday I just saw, 95% of the, all eKYC consent, everything is being captured, is still having a lot of, root, canal issues. So we are not sure whether that is really how to solve it, but that is the areas I think everybody has to go in one step to solve it, yeah.
Thank you, Dillip. It was very useful. So taking this thing one step further, would you like to talk about this topic of credit checks, automated credit checks? What is that as a dimension of KYC? Because that is one side, right? So, please.
Yeah, so credit checks, before that comes digital KYC.
Mm-hmm.
So traditionally, first of all, to answer the first question you had asked, what is KYC, why it is required? So RBI mandates that if you want to have transaction or account relationship with somebody, you should know your customer. How do you know? So you have to identify the customer, that he is Mr. X, then only you can have a account relationship. Now traditionally this was being done manually. You used to obtain the documents from him physically, and we used to manually verify them. Now digital KYC is doing this through technology. No further obtention of document physically, and manual verification is no more there. Technology takes care of that, and regulator also allows that we can do that. And doing that meaning identify the customer through technology and verify the customer is to identify him. That is called digital KYC. And while doing that, we can also do some credit checks as well. So that credit check can be done either integrating the bureau CIBIL score or something, or obtaining financial documents from other financial institutions, like he was telling, account aggregator, it is consent-based, sort of obtaining the credit worthiness. You can judge the credit worthiness of a customer by obtaining his bank accounts, by verifying his bank accounts, his investment in mutual fund and other financial assets. So that is when it is done through technology and without obtaining anything physically, that is called.
So how effective is it? Is it automated credit checks?
Yeah, it is very effective. I'll tell you, I'll give you some examples. Actually, now, see, now how do we check it? Now, when you get some statement from somebody, like bank statement, then he gives you physically. You send somebody to the bank to check whether the statement is correct or not. Now, if you obtain the bank statement, authentic bank statement from the bank itself, and it is always authenticated. There is no question of any sort of fraudulent aspect over there. So it is very, very, very effective. Yeah.
Great. So Now, my next question is in that tangent of AI, because I don't think we can talk about all this without talking AI. So, see, I had a couple of questions, so I'm going to sort of combine them into one because I think it will allow us more time to elaborate on this. How, in your opinion, are we being effective? How effective are we in using AI, ML? Those two are not necessarily the same, AI, ML. RPA and other modern, next generation technologies in making the KY process more effective, KYC process. Vikas, would you like to?
Hi, hello everyone.
Yeah.
See, first of all, let's understand how.
Vikas, is your mic audible? Are you able to hear him at the back? I'm just not sure whether every mic is working, that's all.
Hi, I hope this is.
Yes, perfect.
Great. So let's first understand what is AI ML and how it is different from the traditional software, right? So if you look at traditional software, the traditional software was built by the functional experts and the developers, where they first used to analyze the problem and then come up with the logic, right? So it was more of a logic-based programs that were coded and then deployed into production. However, now things have significantly changed, where your new age softwares, which is your AI, ML, Gen AI, it's all data-based, right? So the data goes into the system, they identify the pattern, and that's how they come up with your prediction or generating the text for your questions and respond accordingly, right? So what it also helps is that you can leverage and refine these models continuously through a proper feedback system. Now coming on to the question that how it helps in identifying or the KYC process, right? So, see, when you start with the identification, the first thing is that you want to put up a picture to a face, to a name, specific name. And how is that possible? If you have to think about defining a logic to make a picture of a person, it is very difficult. It will take ages for you to write that logic, right? So this, with your AI ML based models, you can quickly identify and combine or compare the different images. So one simple example I would give you is that I used to participate in marathons, right? And earlier we used to search the photos by the your number, that is the bib number. However, now you have to take the selfie and then upload it. So from thousands of the photos, it will pick up and display your own photos only in a fraction of a second. So that's how it is quickly mapping your identity, your face with humongous amount of data in terms of the photos. So AI ML gives you the speed, accuracy, and establishing your identification. And beyond that, it also helps you identify your customers from their behavior aspect also. It could be their financial behavior, it could be their social behavior, which will help you determine the credit worthiness and prevent the fraud. So, yeah.
Great. I mean, yeah, I can understand the breadth of the applicability. What about, yes, Dillip, I was also wondering whether you'd like to share, because, while we are moving very fast in the domain of AI, we also are hearing new concerns which were not there with the old generation software, right? Yeah. And there are entirely new words which were not there in the world of software systems before, like hallucinations, like non-deterministic behavior. So,
So it's a great question. I think he covered the ML part, right? So of course AI exists in 1976. I mean, any form of the AI that exists, it has gone from different forms, right? But today's AI, if you look at, right, there is one machine learning where all the models, be it underwriting, be it collection process, be it, approval process, all this use the machine learning, right? It is the LR model, logistic model, XBoost, so many kind of models, right? So that is almost, if you go for the HDFC Bank, there is close to 2,000 models, right? In Axis Bank, I have seen close to, 100,000 plus, right? In L&T Finance, we are having something, 200 plus models, right? These are all models to take care of the underwriting, the approval, credit risks, then, the policy, all these, right? That's the ML, which is very standard. This is nothing new, right? Everybody is doing. Now what is AI is coming into picture, right? That, without, let I pick up some voice AI bot, right? What it does today, we just 2 weeks before we launch some kind of a voice AI bot, right? What it does essentially, there is 400 customer care who is solving every month, and third of the month your EMI is getting bounced, right? So now people are calling, right? Boss, your EMI got bounced, right? So instead of putting the people's, so now voice bot, the exact kind of nature you have to call, collect the money, right? So underneath the tooling is absolutely the AI, the Gen AI. It might be ChatGPT, it might be kind of a Gemini, LLM model. So it has the AI server, the asynchronous kind of recording, TTS, STTS. Then the recording maybe kind of 11 labs, those kind of people. So it is one of the AI implementations in the Gen AI which understand your speech, process it, so it will listen it, process it, and they deliver as the way human does, right? This is the kind of agentic AI voice bot. Similar, we also do the service call centers. So we are trying to solve at least 40-50% is kind of the call center issues through the voice AI bot, right? August 15th is holiday, but bot will work. Things will leave. In any rainy day and all, your agent people, they may not come to the call centers, but the voice AI bot will work, right? I'll talk similar things. Let in the customer care office.
Dillip, I'm
right?
sorry to interrupt, but I think in the interest of time, we will just take it up again afterwards, maybe.
So we have many AI and agentic kind of situations are there. Let you consider the MCP. It is one of the modern context protocols which manage all the call centers. Somebody is calling from the what you call the emails or bot or IVR, WhatsApp or cookie cutter message in the LinkedIn. See this MCP, which is just I think sensational last 1 month, it's going across the Silicon Valley. People are trying to implement how one MCP will contest remembered and answer in one channel, not other channel. So those are the AIs, we all are trying to do that. But that's what it does.
Very interesting. The idea of MCP is very interesting because I think it's at the core of a lot of AI applications. So if we move one step beyond AI now, reducing the credit processing time, the whole challenge of the industry, which is in the lending space, is how do you increase your efficiency, your productivity by collapsing the time? I would like Anish to, we haven't heard from you yet, so please, why don't you?
So I'll just touch upon a very interesting dimension in the space, which is the digital public infrastructure. The colleagues refer to account aggregator as an ecosystem, but there are many more that's happening. Digital public infrastructure is nothing but your utilities for public good. Just like you have highways, electricity utilities, you similarly have digital utilities. Now, when we talk about processing, I think there's a lot that has happened already on the retail side. Personal loans, I remember in my last org, I disbursed in 30 seconds for an NTB customer. And we have all had those experiences in various of our product segments. I think the next wave is started on the MSME side and also on the secured side. So I'll just cite 2-3 very interesting examples, which I believe many of you are aware of, but I think there's a lot that's going to happen in the next 5 years. I think one is the entire land record digitization that's happening in the country, especially the Bhu Aadhaar, etc. Just to give you a perspective, what's going to happen is a lot of assets are going to come into the market today. Because suppose I'm doing a secured lending against a LAP or a home loan, etc. You do not have majority of the assets in the market today. Rough estimates is for a population of 140 crore, again these are wild estimates, it's assumed that residential dwellings in the country is in the range of around 30-35 crores. Only a few crores are in the market today. Because the title, legal ascertainability, market pricing, especially in the rural suburban areas, is very difficult. There is a concept of Abadi land. In a village, you have a highway and all that mapped, but you don't understand there might be 20 dwellings out there and you can't really ascertain which belongs to whom. with this entire initiative of Bhu Aadhaar, you will have a very strongly ascertainable title. Land records are digitally available for 25 states today. So you can actually ping, you can validate the legal title, and you can also monitor the loans that you have given out. Now imagine a situation, you have another 20 crore dwellings and properties coming into the market in the next 5 to 7 years. That is the potential opportunity ahead of us. Now, you can create a lot of credit products around it. Another theme that's being picked up big time with the government is asset tokenization. So you have land records, then you have tokenized those land records, and then you can start doing a lot of lending against it. So these are the next generation stuff that's coming through digital public infrastructure. So when we talk about reducing and improving the efficiency of onboarding, I think not only there's a big swath of data that's going to flow in terms of KYC, as well as, because KYC is not just about knowing the individual, but also the entity. For example, one of the things that we are working on is an authorized signatory registry. Because you can lend to sole props, but what about partnerships? Small private limited companies where you have directors, LLPs. It's very difficult, unless it's in the MCA, it's very difficult to actually know real time who is the real authorized signatory. So can you pull that record real time and ensure that it can be amended, signed off digitally and moved? So these are some of the things that are happening in the larger ecosystem. And many of these are not talked so much about in the media, and it's not so talked about because there are not enough vendors offering it. So these things are going to come in the block over the future, and there's a lot of railroads which are available for direct integration with utilities at the government level as well. So, keep an eye out for that, because these are going to transform the way lending is happening. And there are the lenders who, or people who make the first move are the ones who will see a lot of advantage in the next 2 years.
Thank you. Thank you. Really lovely. Yogesh, would you like to add something? Yeah.
Just drawing reference from what Anish mentioned. So I guess we are also into secured lending to school and college infrastructure. And I guess probably while I heard about the digitalization of land records, but as a business use case, never got that confidence that let's start from a physical legal search to online legal search. But I have noted that, Anish, and I'll make sure that we'll start for some states at least, which are very digital savvy, specifically Maharashtra and Karnataka, I can always recall. So coming to the credit decisioning, and I guess Anish mentioned about the MSME and the SME part of the processing. So coming to the retail, which largely I present, the retail credit, so it is always there. So two-wheeler credit cards, unsecured loan, automobile financing largely, and credit card. So they have all matured to the level that entire end-to-end journey and specifically, of course, the credit scorecarding is largely digitalized and automated. However, there are still some facets of retail credit, specifically mortgage, housing, LAP, and education finance to a great extent is phygital. I would say digital plus physical. So what does largely there lies for credit processing in retail credit? In an era of instant gratification of quick commerce, every customer today wants an immediate decision. But here the challenge is specifically for retail credit. If they adopt to a digital credit processing, so there can be a distance issue and there can be a limited understanding of a customer. So there has to be a fine balance between a faster decision making or the right decision making. Right decision making is contextually which includes understanding the customer as well as delivering the correct decision on time. So that probably I would say is a fine balance which we as a NBFC are traveling or yet to travel probably. So every company has its own. But for us largely, and I think it's true for any NBFC which wants to do a automated credit processing. So the first and foremost is accessing the KYC infrastructure which is already there. And then coming to the risk scorecard engines, then of course we have the entire IDP, intelligent document processing, because that is the key which will allow all the physical document. Customer will give a physical document unless until you give a complete onboard customer journey through a DIY model, wherein the customer is fulfilling everything and it is all front-faced, all the APIs are front-faced. Unless until that happens, if a customer gives a physical document, it has to be converted to digital, and that is what the IDP basically works. And then ultimately the credit risk scorecard, which largely is very subjective and true to each company. So all these combined stack, largely I would say a credit decision which largely used to be around 1 week, even for us. Today we are doing 100% of the cases in around 1 day or so. However, the focus here is now the stakeholders as well as the expectation of all the investors are that how we can make a half an hour or a 1 hour credit decisioning. Probably that is journey which largely we at least have to basically progress to.
Great, thanks a lot. Mr. Mohanty, would you like to add something?
Yeah, so basically, if we look at disbursement of a loan, there are 3 stages: onboarding, loan credit appraisal, and then disbursement. So then digitalization has helped onboarding of the customer, KYC, we are doing eKYC, CKYC, and all this digitization has happened. So it takes less time. Processing, we have a straight through process, we have rule engines and all that. So the processing of the loan, and also we fetch data from various, we have civil data from the bureau directly fetched by us. We have financial data through account aggregators directly fetched through us, which helps us in processing, credit appraisal and all that. Then disbursement is also now happening through UPI or online and all that. A check is not issued and the customer has to go to the bank, deposit the check, get it encased and all that. So if you look at the whole process, the time has, the amount getting credited to your account is a few hours now, if you are eligible and if you have a good track record and all that, and you have got the eligibility. So I think it has helped a lot.
Thanks a lot. Anybody else, would you like to add any comments to this?
I would like to just add one comment. I have heard all the... sorry, AMLAN, please go ahead.
See, what all we have been talking is that, okay, we have increased the speed, we have increased the productivity using multiple digitization, and this is not a journey that has happened in past 6 months, 1 year, 2 years. This has been an ongoing journey. I have seen transactions where a physical form was getting filled up and the shopping carts were used to give it to credit appraisers and stuff. From there, it has all moved to app-based, bank connects, perfios, checking whether the bank statement. One thing that I want to highlight is while KYC and your bottom line are directly proportional. The more you know the customer, less is the chance of fraud, lesser is a hit to your bottom line. So KYC, when it comes, it's not only a regulatory parameter that has to be worked upon, or credit decisioning is not a checkbox that has to be ticked while we are lending. See, lending institution, especially NBFCs, most of us do not have a CASA base or a deposit taking where we have a lower cost of fund. We borrow from the market and we lend it to the people. So any glitch in between, so what I very colloquially say, paisa dena hi nahi hai, lena bhi hai. So the better and smoother your credit decisioning and KYC is, the chances of credit loss minimizes to that extent. So that's what in the entire digital journey we have to look at. Have been scenarios where multiple frauds have happened, where the statements were fudged, the income was extrapolated, multiple things were happening. But with the digital technology coming in, where the statements were fetched directly from the bank connect or from the what you can say account aggregators, so there is no manual intervention. And the more you reduce the manual intervention in the entire process becomes more seamless and robust.
Absolutely. Thank you so much. I think that's a very interesting, different angle which we need to also keep in mind. Yeah. So we have covered a lot of these points, and I am now heading towards the last couple of questions. So, is the customer onboarding journey improving through digitalization? Are we making it, more, in some sense, less of a pain, by using digitalization? So, any of you wish to pick it up? Yogesh, Vikas, anybody? Yes, please.
Yeah, sure. I think the overall onboarding journey has got simplified a lot, right? If you look back in older days, it was more of a paper-based heavy process, right? Now, if you have all the right accounts in place, you have registered at various government bodies, right? Your GST can be pulled straight away. Your e-verification can be done straight away. So the burden on the customer has also reduced and the speed has gone up. So this is how the onboarding process has got simplified. Plus it has reduced the number of visits your team has to make to complete the process, right? So overall your effort has gone significantly down.
I'll just
Anish,
take up one interesting example. There's something we are building and we recently got an RBI sandbox exit. We were the only entity which successfully exited the sandbox. And I'm talking about onboarding from an access to credit perspective for MSMEs. So we have actually built a platform for deep tier supply chain financing for MSMEs. Now, the classical problem has been that NBFCs and banks have not been comfortable to lend to the smaller entities, especially because supply chain is the best product for MSMEs. They need working capital more than they need term loans, right? And they don't get easy access to it because in a supply chain program, you need a corporate anchor or a well-rated or a well-underwritten anchor to support the bills. To solve for that onboarding and the entire risk aspect of it, on the blockchain, we have created a system whereby an anchor can bring not only his typical suppliers, but also the tier 2 and tier 3 suppliers, right? And the moment the anchor accepts the invoice of purchase from, let's say, the tier 1, we convert it into tokens using this blockchain platform. And those tokens get distributed to tier 2, tier 3, and so on. And they approach the NBFC or the bank with those tokens and get them discounted. Now, essentially, what are we doing in very simple terms? We are using the credit worthiness of a well-rated corporate or an MSME and ensuring that credit worthiness is used to go to the last mile. And that's where you are creating programs. The interesting part is it can also eventually open up doors for tokenization in a larger context. So we have built the entire platform on blockchain, and it's something that RBI just a couple of weeks back has kind of approved. So yeah, onboarding using technology, but from a context of inclusion.
Yogesh, would you like to pitch in?
Nothing.
Okay. Shobi, any of you?
I would just like to take a minute to thrive on some points that I heard from the panelists, esteemed panelists, of course. So this digital onboarding or the advent of digital technologies is not just about faster processing. One angle I touched upon, which is the virtuous cycle, it kicks in. However, it talks about innovation, a lot of product innovation. One innovation, Anish pointed out, I think 2-3 examples he gave in terms of secured lab, tokenization, and he's also talking about using the anchors credit worthiness to be flown to the tier 2, tier 3 vendors or suppliers. Similarly, through account aggregators, financial information providers are many. It's not only banks, there can be GST. I think Vikas pointed out that part. It could be GST, it could be mutual funds, it could be my assets, right? So today when I connect with the account aggregator and the borrower gives the e-consent, I know 4 parts of its financials. If the borrower is a microeconomy, I know about his income, his expense, his asset, his liability. The liability comes from the bureau and the assets come from the other connectivities, income and expense come from the bank accounts. So that gives immense possibility to innovate on the products. It can be income-based products, it can be a cash flow-based product and programs. So innovation, product innovation is the next step forward with a digital journey or digital technology coming in the lending scenario. That is one. And number 2, I want to touch upon on the KYC. When we talk about KYC today, but there are a lot of discussions and deliberations on the MSME as well. So it's not KYC. It is changing the way we do KYC and KYB. Know your business, know your customers. So yeah, with that, I'll give it to others.
Okay, that was very interesting. In fact, you're right. The customer, the animal called the customer itself is a different shape if it's an individual or a family versus if it's a business. Because probably to be able to evaluate a business, you may need to evaluate that business's customers also to see whether the business is on solid ground or not, right? Very interesting. Okay. So, okay, we'll go on to the last question for our session today. And I can see that clock that is staring at me, scaring all of us. So now let's talk about automation and fraud. I mean, how has this fraud angle been addressed by the automation? Please.
Yeah, I'll tell.
Yes,
so
please.
the fraud actually happens. One is a impersonation fraud. Second is, I am from housing finance industry, so I'll talk about mortgage business. Then, second fraud that happens is, the financial documents or whatever eligibility that we are considering for a borrower, whether those are correct or not. Third is the mortgage property, whether there is any fraud or there is multiple funding on a property or the property existence is not there. So these three types of frauds can happen in a mortgage industry. The first is taken care of by digitization. Impersonation has been reduced to a large extent because, you are doing through 𝐾𝐢𝐠𝐢𝐭𝐚𝐥 𝐊𝐾𝐲 Aadhaar verification or something like that, and the video KYC as well, where that is taken care of. Second part, since we are having this, collecting the information directly from the source, it is minimized. Form 16, income tax and all that, documents we are getting, so that is also minimized. Third, that duplication or multiple funding on an asset or the existence of an asset, there we need to be careful because we do not have in India as on date any place or any records where we can do it, and we have to rely on or depend upon the lawyers or advocates or maybe the sub-registrar's office and all that. That is where we need to work on to depend on digitization. That is
Thank you so much. Yes, please. Anish.
Since we're on the last 40...
I have a basic question. No, the seconds, we are going to go over by a few minutes. The conversation is very interesting. I have a basic question to all of you. I am the novice, you are the experts. See, when we talk about a CIBIL score, and his comments triggered this question. When you have a CIBIL score, the CIBIL score is connected with a human entity or some other entity. Either you have, a PAN or some ID which identifies uniquely this entity's CIBIL score. Do we have something like that for property, for real estate?
No, not yet. And the property, that's what I was talking about, the Bhu Aadhaar or the digital Aadhaar exercise, and various other things have to come in. But, there are two parts. The circle rates are still stable in the rural areas, not so much in urban. But, using transaction records, you can actually pull APIs eventually. It's not yet so simple, and you can create those approximations. My hypothesis is few years down the line, you will not need physical valuation and validation of properties. Largely, it will be possible digitally. And in fact, I'm a big proponent of creating a registry by which if one entity does it, can we make it interoperable so that the cost gets saved? But no, right now, it's not so simple. The second part, just on that fraud thing, since we are on the last session, I just thought I'll give a business opportunity idea to at least the relevant lenders in the room here. We talk about a 25 to 30 lakh crore credit gap for MSMEs in every forum. We are figuring out, all of us here are trying to solve and also take advantage of the opportunity. One thing that is coming through quickly, I was talking about MSMEs in supply chain. One of the biggest reasons why lenders are not able to tap into that thing is you cannot trust the invoices. There's a big fraud that happens, the genuineness of invoices and also the invoices getting double funded. So we have actually built a repository as a DPI. It's India's first universal repository for actually identifying if an invoice has already been funded by somebody else and also verifying it. Now, this entire thing uses AI, ML and a lot of other standardization protocols that we have built to create a global standard for the country, because it's extremely difficult for invoice standardization because you have commercial invoices, e-invoices and various kinds of supply chain programs. Now, once you can tap in, you can actually start lending to smaller MSMEs, including in agri and MSME space. So that's where you're looking at a huge opportunity to unlock. So keep an eye out on some of these things, because fraud, as he was talking about documentary fraud, these are not only challenging in the existing businesses, but if you're looking to expand your current businesses, these kind of DPIs are being built today.
I was wondering, Mr. Singh, would you like to say something about
while we were discussing, just a thought struck my mind. these developments or these technological advancements are not only happening for the lenders or the financiers, it's also happening for the fraudster. So, well before any financial institution decided to use AI, fraudsters have started using deepfake videos to go ahead and initiate fraud. So, we have to be one step ahead of them. And as I said, according to me, knowing your customer is directly related to your bottom line. So, if I am not knowing my customer, so KYC is a very important part which at some point gets into a checkbox item, and things are not taken that seriously, because what happens is there is a gap between our onboarding or the frontline sales to the collections team. So a frontline sales sells something, and even if there is a discount of fraud given by 10%, eventually the collection people suffer. And in the entire bargain, the company suffers. So making my KYC process foolproof or fraud resistant to the extent possible is something that is key to having a good bottom line in the future.
Thank you so much. Absolutely. I think I would love to continue this for 15 more minutes, but I think we have been getting very dirty looks, so we will we will please. So I'd just like to wind up. I know we started a few minutes late also, so I'd like to wind up by thanking each of you for an interesting conversation. It's very hard to get senior people together to have an interesting conversation these days. Life is full of ChatGPT generated nonsense content. Here I am talking to genuine thinking minds, and it's such a pleasure. I just want all of you to give a round of applause to the panel. Thank you so much. I think with that we will close. Thank you very much.